GameStop's wild ride continues, up again, more than doubling from a week ago. Bob Pisani has a good piece out on CNBC.com saying that short sellers are down $91 billion this month. And GameStop is obviously leading the score.
Retail traders aren't just taking on hedge funds. They're also trying to take them down. Social media is driving this new phenomenon, and it's changing the investing game.
We're calling it the Reddit trade, for lack of a better term, but certainly the focus on huge short positions.
Hi everyone, I hope you guys are all doing great and made some money during the past couple of weeks. As you know, a lot of crazy stuff happened that I want to talk about today. As you guys probably heard, stocks GameStop, ticker symbol GME, jumped from $16 to about $350 without any fundamental supporting it, and everybody are shocked at that what happened. And you probably heard about the word short squeeze a lot, so I'm going to talk about what short squeeze is. Basically, there are two ways of making money in the market. One way known as going long. Basically, you're betting that the stock will go up, so you buy low and you are hoping the stock to go up and you sell high. That known as going long into the market. Another way of making money in the stock is going short. What you actually do when you short a stock is you're betting against a stock that it will go down, so that way you can make money. How you short a stock? Basically, instead of buying low, you sell high this time. You start by selling high, but because you don't have any shares to sell at the high, you basically go and ask your brokerage to lend you a share. So you basically borrow share from your brokerage and you sell high, and you're hoping that the stocks come down so you can buy back at the bottom, which also referred to as covering. So again, to repeat myself, you sell high and you buy low. That's how you make money when you're shorting a stock. But the risk with shorting a stock is that you can lose more than 100% of your money. So basically, when you go long, what is the worst case scenario? You lose whatever you invested in. Like for example, you invest in $2,000 and you lose your entire $2,000. But when you short a stock, if the stock doesn't go down and instead it goes up, there is no limit to how much you can lose money. If you don't cover, you can lose whatever percentage that it goes up. So always shorting a stock is a risky move. One might say that after I shorted the stock and it went up, I will wait till it comes down and then I cover, because I know that it's gonna come down for sure. But basically, that's not how it works. There is something called margin. Basically, this is the limit that the broker lets you to lose money before they ask you to cover your share. So let's give an example. Let's say you shorted the stock for $2,000 and now you are losing $4,000, and that's your limit. So what's going to happen? You get a call from your broker, which is known as a margin call, and they tell you that we need our shares back. The shares that we lend you, we need them back because you're exceeding your limit or your margin. So once you get the margin call, you have 2 to 5 days to return your shares and cover your shorts. Let's talk about what short squeeze is. So for example, in this case, at the beginning of the pandemics, a lot of hedge funds, a lot of big guys who have like a lot of money in their hands, they already knew that the stock market gonna crash based on experience, based on the news that they heard at the beginning of the pandemics, that there is a virus that is spreading too fast, is going around the world. So what they did before the pandemic, they start selling all their shares and they start shorting a couple of stocks like travel stocks, retail stores, a lot of stocks. So they made a lot of money during the pandemic. So basically what happened during past couple of weeks is that people in Reddit, in Discord, in other social medias went after stocks that have high percentage of short float. Basically, when you see a stock has a short float above 20 to 25%, that's how you know that it's institutions and hedge funds that are shorting that specific stock. What happened to GME is that GME had a short float of above 100% or around 100%, and that's how you know there are institutions and hedge funds that are shorting the stock. So a group of people in social media and Discord started to buying this stock and as a fund to go against this hedge fund. what happened, it creates a fake bullish jump. As a result of fake bullish jump, a retail investors that probably shorted or like the institution start to panicking a little bit, so start to covering. So what happened next is that the stock even jumped more, because when they cover their shorts, they are basically buying low, which means that they're creating more buying pressure. What happened after the stock jumping, even more people jump into the stock, even bigger investor come in and started to buy, which created more jump and more panic for this institution. So they either started to covering at this point or shorted at the higher value because they assumed that it's gonna be the end of the short squeeze. But they were wrong. What happened was I don't think they got unlucky. Probably Elon Musk and other billionaires like Chamath joined the movement. So they start tweeting, basically hyping the stock even more, and Chamath himself bought a call option on GME stock. That created the stock to even go higher, and it created more short squeeze because again institution now had to recover the stock, the stock that they shorted at a higher value. So a lot of people made crazy money in these stocks. AMC, GME. I personally didn't join it because that's not kind of my style of investment, because when the stock jump 200, 300%, I usually try to stay away from them. But every day when I woke up and I saw that the stocks were keep jumping and keep going higher, and I knew that it's a short squeeze, and on the other side of the short squeeze are the hedge funds and the institutions that are losing money, I was happy because I knew that that's the time that people, retail investors like us, are making money right now. So congratulations to all of you guys who made money. For those of you who are in my Discord, you know that playing short squeeze is one of my strategies. During past week, I bought Fubo TV, ticker symbol FUBO, because that stock was heavily shorted, and as you know, it is in the same industry as Netflix. So after Netflix beating the earning, I knew that it's gonna be a positive catalyst for Fubo TV, and we're gonna expect a massive short squeeze. So I bought at $30 and now it's trading at $52. I personally sold at around $47 for 55% gain. I also bought SPCE, Virgin Galactic, and I knew that after their previous flight was having some issues, it was again shorted heavily by the institution, and we were expecting an announcement for the new flight date. And also ARK Investment bought the shares, and it caused the stock to jump a little bit, so it caused another short squeeze in the market. I sold for 60% profit, but I have to say I never seen something like GME. The other thing that I want to talk about is, based on expectations, hedge funds and institutions and these big billionaires are used to winning, and right now for the first time they are now winning, and frankly they're not taking it very well. I also want to talk about the risk in this style of investment. While us retail investors are buying against these hedge funds, there are probably some other hedge funds that are with us, or other billionaires that are joining us in these movements for any reason that they have. So what is the risk is that once the sell-off start to begin, as you might see stocks being up all day like 200, 300%, and you just walk out and come back to seeing that the stock is now 50%. So when the sell-off starts, it goes down so fast the same way that it went up. So that's the reason that you usually see me selling a bit earlier with these kind of plays. I usually don't invest based on emotion, but after seeing what happened, that they shut down the accounts of people in Reddit and in their Discord account, I really got frustrated. I ended up buying into Naked brand, ticker symbol NAKD, and I think it can be the next candidate for the short squeeze. But again, I don't suggest any of you guys to get in, because we had a massive run up, like 250% run up, and I bought in after 250%, which is always risky. I can't give you any prediction or talk about any fundamental or technical analysis, because that's not how everything is actually trading right now. It's trading on something that I don't or haven't seen usually. So I basically don't have any prediction. If you are in it or any other type of short squeeze play, take your profit when you are happy with your investment. Don't wait to take all the pie. Be happy with the piece of the pie. At the end, thanks for watching. If you want to know what is the next candidate for the short squeeze like FUBO or SPC, make sure to join my Discord. I leave the link in the description. Make sure to turn on your post notification and give us a thumbs up. Thank you.